Okay, after we've prepared our adjusting entries, the next step would be to prepare an adjusted trial balance. And again, the only reason we're preparing an adjusted trial balance is the same reason we prepared an unadjusted trial balance, which is to make sure that our debits equal our credits. We shouldn't go forward if our debits don't equal our credits, because that means that we made a mistake. So the next step in the accounting cycle is to go ahead and prepare our financial statements once we have our adjusted trial balance complete. Once we prepare those financial statements, the next step is going to be to journalize and post closing entries. And what that does is it's really going to start us over scratch for our next accounting period. If you think about maybe a football game, we have 4 quarters, and at the end of the game, we erase that score and we start over fresh for the next game. And most games that we play do start fresh. Basketball, baseball, racing, all of those start over. If you think about the poor Jaguars, what would happen if after every game they had to take that score and carry it on to the next game? They'd really be behind. So accounting is very similar. We want to clear out some of our accounts so we can recapture what's happening during this particular accounting period. So we have temporary accounts and we have permanent accounts. Our permanent accounts are our balance sheet accounts, our asset, liabilities, and equity accounts. Those don't go away, unfortunately, at the end of an accounting period. We still own what we own. We still have liabilities and obligations to pay, and we still have our equity. What we do close out, though, are our revenue, expense, and dividend accounts. Those we're all going to wipe away clean for the next accounting period so we can start accruing new to find out what those are going to be as we go along. I like to call those the red accounts, and it's nice because they actually do spell out red. So those temporary accounts, revenues, expenses, and dividends, we need to close those out in preparation for the next accounting period. What we do is we post any extra into our retained earnings. And then again, those permanent accounts, our asset, liability, and equity accounts, are going to stay open. So there's 3 basic closing entries, and they look almost identical every closing period. And the first step here is going to be to close our revenues. So I'll just put a little 1 here, is to close our revenues. And the way we do that is revenues normally carries a debit balance, a credit balance. So we're going to go ahead and debit our revenues here to zero out that balance. So whatever balance revenues has in our ledger at the time, we're going to go ahead and debit it for that amount, and we'll credit retained earnings. That has the impact of increasing our retained earnings for the amount of revenues that we had during the period. The second step in our closing entry is going to be to close expenses. And here we're going to take up all of our different expenses. So if it's salaries expense and rent expense, utilities expense, we're going to list out all those individually along with their associated balances. And then we would add all those up, and we will go ahead and debit our retained earnings for the amount of all those expenses added together. So that's going to have the impact of decreasing our retained earnings. If you think about your statement of retained earnings, that's effectively what we're doing here. And then the third step along the way is going to be to close out our dividends. So by doing that, what we do is we credit dividends because it normally carries a debit balance. So we want to zero that account out, and then we decrease our retained earnings for the amount of dividends that were paid out during the year. Some textbooks have this as a 4-step process, and in which case instead of crediting or debiting directly to retained earnings, you credit to and debit to a special account called income summary, and then you close your income summary to retained earnings. So pay close attention to that. You might want to just double check to see how your textbook handles that particular assignment. And let's actually do a problem here. So these 3 entries are all you need to do. What's going to vary then are going to be the expenses between companies, and some companies have more than 1 revenue account. So here's an example. We can take an adjusted trial balance and then prepare the 3 closing entries associated with this particular company. So remember that first closing entry requires us to go ahead and close our revenues. Well, let's figure out what revenue accounts do we have. I see interest revenue right there, and I also see service revenue. So So those would normally carry a credit balance. The only way I can get rid of that credit balance then is going to be to debit both of those for the amount showing on our books. So $54,000 for service revenue. And interest revenue has a credit balance currently of $500, so we need to debit that. And then we'll credit our retained earnings for those two added together. The total debits, which is $54,500. Okay, now my debits equal my credits. I can move on to the second closing entry. And that's going to be to close out all of our expenses. So what expenses do we have? I see depreciation, I see rent, I see supplies, I see salaries, and am I missing something? Interest. Yeah. Okay, so let's go ahead. We would debit retained earnings for the total of all of those expenses added up. I'm not sure what that's going to be yet until I get them down here. So we'll go ahead and write salaries expense, and you do have to write them out individually because, again, remember when we post this information into the ledger, that's going to zero out those accounts. It's going to bring those balances down to zero. Sorry, I'm abbreviating here in the effort to save time. And rent. And then we would write those associated amounts. So salaries was $20,800, supplies $1,800, $2,400 for interest expense, and depreciation expense I think was $2,600 up there, and rent is $5,900. Okay, so if we add all those together, all those credits, and we add them up, looks like we're going to get $33,500 is my debit to retained earnings. And hang on one second. Okay, so I want to make sure we had enough room to do the third closing entry. So we're going to move to a clean slide. So we've got the first one to close our revenues. Second one's going to be to close out all of our expenses. And the third step is going to be to close any dividends that we might actually have. So and the way we're going to handle that is to debit our retained earnings for the amount of dividends that were paid out during the period. And it looks like our dividends here were $16,000. And then we credit dividends for the amount sitting there. Couple of cautions, however, related to those closing entries. So those are our three closing entries. Let me review those with you, because I've seen them happen. Avoid unintentionally doubling the revenue and expense accounts rather than zeroing them out. So I have seen students, they flip-flop those transactions. So they're crediting revenue and debiting expenses. That's a problem. You're doubling them, you're not zeroing out those balances. After we post those journal entries, all those temporary accounts, those red accounts, should carry zero balances. We are not posting any entries into retained earnings during the year. And as it says, we're not closing those temporary accounts. After we do our closing entries, we prepare a post-closing trial balance. And I bet you can tell me why we do that. The reason we do that is to make sure our debits equal our credits before we move forward into the next accounting period. Again, we want to try and get a quick idea whether or not everything looks good, and that's one way to go ahead and do that. So a couple of things. After we prepared our post-closing trial balance, or done our journal entries from our closing entries, we prepare this post-closing trial balance. Again, debits have to equal credits, so it looks like my lines are off here a little bit. Debits have to equal credits. If they don't, you probably want to look in here and see, did we leave any of those red accounts, the revenue, expense, or dividend accounts, open? That's sometimes you miss closing one of those, and we want to make sure we don't omit one of those particular items. And once we're done with that post-closing trial balance, we have completed all the steps in the accounting cycle. So good job. We've reviewed them quite quickly here, and you're doing great.